From a multi-decade view on a monthly chart, primary characteristics are rapid bullish spikes followed by moderate bearish spikes, then longer periods of stability until the next bullish surge. From 2016 to 2017 on a weekly chart, more detail is shown, but the overall situation is the same with another correction of the overall uptrend. The main bearish acceleration after the sharp peak has given way to more stable movement. The daily chart shows similar characteristics, as the broader context sees a new uptrend in development. The declined head and shoulders halts the long-term uptrend and provides very helpful trend lines. This is a variant with two large candles forming the shoulders, rather than full swing points. The result is a more compact pattern. Other than that, the pattern has all the characteristics of a more common flat symmetrical head and shoulders. In sharp contrast, the current bullish reversal stems from a flatter reverse head and shoulders. It even has aspects of a compact double bottom forming the head before the more gradual rise to the neckline. Once again, trend lines from the pattern are quite helpful. In this case, X really does mark the spot where there is the firm transition from bearish to bullish. Towards June, the upper trend line is broken, and the steeper uptrend line holds to produce a bullish acceleration. The stable uptrend does slow down approaching July, upon returning to the head and shoulders range from late 2017. After the uptrend line is breached, it becomes clear there is a similar declined head and shoulders. There is a minor delay to completion in August. That ends up being the minor neutral to bearish phase of strong 3 methods rising price action. This in turn leads to a failed head and shoulders and a larger bullish continuation. The uptrend line retains influence, but it is much lower after being crossed multiple times with increased volatility. Now, it is also worth noting there is a noticeable shift to more neutral to bearish price movement. Despite the long upper wick from the large green bearish star, in mid-April there is still the distinct outline of a head and shoulders as the basis for the stable downtrend. Interestingly, the upper downtrend line reverses roles to offer key support in early 2019. The more common expectation would be for the lower uptrend line to be contacted, though it should also be remembered this is at the base of the failed head and shoulders. During the next moderate correction, the main focus is on the long-term uptrend line, rather than the bearish reversal patterns that produced the stable downtrend. Although the lower uptrend line was breached and there was a successful descending triangle, the longer-term context was still mostly bullish. There was also a significant decrease in bearish acceleration after the uptrend line was broken, and the lower 14 range was the site of clear upswing points in the recent past. It is similar to other charts where a bearish reversal and continuation take place, but have a lower impact due to broader bullish context. The clean price action of a double top range incorporates aspects of a descending triangle, as the main bearish reversal is delayed towards May. Then once the lower boundary is broken, there is a characteristic bearish acceleration. The downtrend lines prove to be useful in determining the trajectory of downswings. Not surprisingly, there is stronger support approaching the mid to lower 14 range, as this was the site of a major range comprised of the bearish reversals seen earlier. Into 2021, there is still a compact double bottom and a wider triple bottom, but the continued influence of the stable and aggressive downtrend is still present. Even after briefly surpassing the upper downtrend line, the broader bullish reversal range faces immediate opposition and delay to completion, though once the upper boundary of the triple bottom can be passed, there will be clear resistance to reference from swing points in the prior downtrend. This example has mainly focused on bearish reversals in a larger uptrend and the use of trend lines. Analysis can be done when there is less clutter on the chart, as shown by the reference of approximate pattern ranges, rather than marking lots of price levels on the chart like other examples, though it does of course reduce precision. Analyzing a chart in a way similar to this case study can be helpful in determining general chart characteristics before marking more precise ranges and levels.